Okay, I think we can start. Good morning, everyone. Welcome to the Genghis Weekly Investor Briefing. And this being a new month, we bring you the key events in the financial sector for the past week and what to expect for investors in this new week. With us today, we have our two presenters, that is Melody Ndanu and Wesley Manambo, who are going to take us through the presentation today. Now, should you have a question, kindly direct it to the Q&A section, and it will be answered at the end of this presentation. And should you want maybe to ask your question live, you can raise your hand, and we'll be able to give you a chance to ask our panelists questions at the end of the session. So over to you, Melody.
Thank you, Daniel. Good morning, everyone. I need to share my screen. Is it visible?
Yes. Yes, it is.
Oh, okay. So we're going to start with the macroeconomic review. So the Kenya National Bureau of Statistics released the inflation numbers last week. So it reported that the October inflation headline inflation was at 6.45, which was much lower than the 6.91 that was reported for September. So this inflation figure is between the set range by the CBK, that's a 2.5% and 7.5%. So the decline was largely attributed to the lower pump prices because of the marginal downward revision by EPRA last month. So the transport index, which forms part of the consumer price inflation index, indicated a lower travel costs due to the reinstatement of the price mobilization mechanism. So food inflation, on the other hand, rose 10.6% year on year, mostly due to the increase of certain food products, which outweighed the decrease in others. For core inflation, it remained muted, having dropped from 2.7% to 2.2%. So this indicates that there is lower demand pressure due to lower purchasing power in the economy. Moving on to the next slide, we're going to look at, so what happened was on 26th of October, the World Bank announced it had approved a $150 million loan, or rather International Development Association credit, to support Kenya to identify locally led climate resilient projects. So that comes to about $171.4 million. So the funds are supposed to support community level climate resilient investments and to strengthen both the county and national government capacity to manage climate risks. So we've seen that the country is experiencing bouts of drought at the moment, and we saw that it was even declared a national disaster by the president in September. So these funds are supposed to revive sectors that have been affected by the pandemic as well as the drought. That's like the tourism and wildlife, agriculture, energy, such. So of note is that this coming week, government, business leaders, and sustainability experts, they'll be meeting in Glasgow for the COP26, that's the UN Conference of Parties, where they're supposed to discuss about the strategies to achieve a below 1.5 degrees Celsius global warming target, or they're going to mobilize funds for for providing funds for climate finance, as well as for addressing the issues that are coming up on climate change. So we also note that they remember that CBK had put in place measures for banks to let me say that again. So the CBK has forced lenders to, or rather has instructed lenders to institute measures to avert the financial loss that can come up from climate change. So they provided a guidance note on climate-related risk management, So that will be from June next year to factor in climate change component when they're lending out. Another thing is the diaspora remittances. They hit 309.8 million in September. So this is from 260.7 million in September last year. So that's almost a 20% year-on-year growth. Though this is marginally lower than the previous month, that was 312.9 million. So that's about a 1% decrease. So the CBK attributed this mostly to seasonal factors. So cumulatively, the total diaspora remittances for the first 9 months to September has come to $3.530 million. That's a 20% increase. So US still remains the highest source of foreign exchange. That's about 61.8% in September. So the way we're seeing it, diaspora remittances will continue their upward trend. Mostly we've seen because banks now are partnering with international other distribution channels to offer money transfer services. And also part of the government's COVID-19 economic strategy, about 500 annually. So because a key support in a capital account, because we've seen how tourism and export inflows have been affected due to the pandemic. So recently the CBK had done a survey of the remittances as a part of its initiative to increase this foreign flows. Moving on to the fixed income segment, we saw that last week we had the EABL medium-term note, and it had recorded a very impressive performance, which was oversubscribed by about 3 times, and they received about 37.9 billion against a target of 11 billion. So this 5-year note will be listed on the NSE for trading on the 1st of November. That's today. And will pay a semi-annual coupon rate at 12.25%. So we mostly attribute this performance of EABL due to its repeat issuer status. It had issued a medium-term note before, which they expired early, and mostly due to the fact that that one was more expensive. I think the rate was about 14%. So when we look at the secondary market participation, it's been edging upward for the second week consecutively, closed at 22.9 billion. That's a 50% rise week on week. So market activity mostly was on the IFB segment as an infrastructure bond, coupled with the longer edge of the end of the yield curve. Additionally, the CBK had announced this month's bond issuance as it's seeking 50 billion shillings for budgetary support. So the sale will feature the reopening of FXD1 2019-20 and also the issuance of a new bond. That's the FXD1 2021-25. It's going to be the first fixed rate bond in 2021 with a 5-year tenor. So we see that this bond may have heightened subscription. This 5-year bond, mostly due to the tenor preference by banks, because they prefer the shorter term papers. Kenya Mortgage Finance Company is planning to raise 10 billion in tranches from investors in the capital markets via a bond by December to finance low-cost housing, though they are still waiting for approvals from CMA to roll out this bond plan. So essentially, the proceeds of this bond will go to banks and SACCOs for onward lending to prospective home buyers at a single Looking at the T-bill, the upward trend went up by about 7.4 basis points week on week. So moving on to the next slide, we're going to look at liquidity trends. So the markets last week had mixed trends during the week. So the interbank rate rose by about 30 basis points, settling at about 4.92%. It was about 4.63% the previous week. That just goes to show a bit of tightening there. In regards to the open market operations by the CBK, they injected liquidity at the front end of the week via reverse repo. That was about 6.6 billion. However, they mopped up 40 billion at the tail end of the week. So that was signaling improved liquidity. So you can see that, and it eased during the end of the week. So for government borrowing, we estimate it at 288.7 billion versus a prorated amount of 227.9 billion at this juncture. So it just goes to show that the government is ahead of the borrowing curve. So there's also news of an anticipated roads bond next month to clear the bills owed by the State Department of Infrastructure to various contractors pending bills. So the principal secretary for infrastructure noted that the bond will attract interest at market rates, and the bond is necessary to avoid risk of fines and penalties. So it was found that if these pending bills are approved, the bill will go even higher. So they're looking at this to sort of manage the debt situation. But we're waiting to see like the actual prospectus to find out the tenor, the amount, the rate. So all that will have to wait for the actual prospectus of the bond. Moving forward to the macro and fixed income calendar. So we have the October Stanbic PMI, that's the Purchasing Managers Index. That's going to be on 3rd of November. So last month, it had witnessed slow activity, falling to 50.4 from 51.1. Mostly this was due to the price increase in fuel that affected input costs as well as the output charge inflation. So this month we're anticipating for a better reading, mainly due to the lifting of the dusk to dawn curfew, the extended operating hours, and as well as the continued vaccination efforts by the government. The government had also, the president had noted that essentially Kenya should start vaccine production by Easter next year. But there's some things that still need to be sorted out to do with the vaccine. I think something to do with the trade backs or something, but there's just something that is pending for that. On 4th of November, we have the T-bill auction. That's a 91-day, 182-day, and 364-day auction. So for the trade of the week, IFB 2021-21 at 12.4 to 12.5 coupon rate, which is the highest in the range, and as well as compared to the other bonds that have been issued. Even if you compare with these new bonds that the government is seeking to reopen and to issue, the rate is still much higher. In addition to that, IFBs are tax exempt, so the coupon payments are going to be tax exempt, and it's paying coupons, I think, in March next year. So over to you, Wesley.
Thank you, Em. Good morning to you. The market closed the week on a cautious tone, as signaled by the benchmark indices week-on-week performance. The Nairobi All-Share Index dwindled 30 basis points week-on-week to settle at 177.96 points, while the NSE 20-Share Index plateaued at 1961 points. That said, market turnover declined 39.3% week-on-week to a turnover of 1.95 billion. Eveready led the pack of the week's top gainers on an 11.1% week-on-week rally. Britam, Williamson T, Uchumi, and Stanbic gained 6.1%, 5.5%, 4.6%, and 4.4% week-on-week respectively. EA Cables led the week's laggards, shedding 11.1% during the week. IGAD, Sassini, NMG, and the Fahari iRate shed 9.1%, 5%, 4.8%, and 3.7% week-on-week respectively. The bows had some exciting news, which I think Em will cover in her review of the financial sector. So looking at foreign participation, foreign investors accounted for 68.4% of the week's turnover. They veered from bullish to bearish with outsized exits in KCB, while accumulating on Safaricom, EABL, and Equity Group to clock a net outflow position of 206.07 million. East African Portland, on the other hand, East African Portland Cement reported its earnings per share for the year ended 30th June 2021 at 20 shillings and 97 cents. Top line grew 11.6% year on year, with revenues coming in at 2.8 billion. Cost of sales came in at 3.6 billion, translating to a gross loss of 820.5 million. Loss from operations were reported at 3.2 billion, which is a 2.7% growth on a year-on-year comparison. The group, however, registered a profit after tax of 1.9 billion on account of 5.8 billion fair value gain on investment property. That said, the balance sheet shrunk 1.5% year-on-year to 34.6 billion. This morning, we've woken up to energy sector release. We have KenGen's full year results and KPLC. Combing through, you'll see that KenGen reported an EPS of 18 cents for the year ended 30th June 2021. Their revenues grew 4.1% year-on-year to 45.9 billion. The growth was attributed to revenues from geothermal, hydro generation, and Tulumoye drilling. And the Ethiopian venture contributed 1.8 billion to the top line, which is a 305.5% year-on-year rise in contribution when you look at it from a year-on-year comparison. Operating profits declined 22.7% year-on-year to 15.9 billion, partly due to an 82.4% year-on-year decline in gains from forex and fair valuation of financial assets. Steam costs, on the other hand, declined 4.2% year-on-year to 3 billion due to low dispatch from power plants utilizing steam from third-party owned wells. The counter reported its profit after tax at 1.2 billion after a 13.6 million income tax expense on its profit before tax that came in at 14.8 billion. Its balance sheet grew 3.1% year-on-year to 425.7 billion, and the board declared a first and final dividend of 30 cents. We'll look deeper into it and present you in our next week's corporate calendar with the book closure. KPLC, on the other hand, reported its earnings per share for the year ended 30th June 2021 at 76 cents. Revenues grew 8.2% year-on-year to 144.1 billion. Cost of sales came in at 94.2 billion, which is a 7.7% year-on-year growth, translating to gross profits of 49.9 billion. Transmission, distribution, and admin costs declined 16.7% on a year-on-year comparison to 39.9 billion due to lower provisions as a result of enhanced revenue collection, cost management, and resource optimization. Profit after tax came in at 1.5 billion, which is a 258.7% year-on-year growth. And this was after an income tax expense of 6.7 billion on profit before tax that came in at 8.2 billion. The counter's balance sheet grew 2.1% year-on-year to 332.2 billion, and the board did not recommend a dividend payment. Looking at the sub-Saharan market performance, the Nairobi Oil Share Index dwindled below its peers on a week-on-week median comparison. The market's price-to-earnings ratio was above the African median multiple of 9.9, while its dividend yield was below the African median by 160 basis points. On the corporate calendar, we have Safaricom's half-year results scheduled for the 10th of this month. To you, Melody.
Thank you, Wesley. So looking at the counters last week for the banking counters and the insurance counters, so BK Group was the highest, had the highest lead with about a 5.5% growth week on week to close at 29 shillings. HF Group also experienced a bit of growth, got to 3.81, 3.3% growth week on week. As well as Stanbic Holdings closed at 94 shillings. That's a 4.4% rise week on week. I could assume that maybe investors are accumulating on this share as they anticipate the results coming out for the quarter 3. For the insurance sector, the highest gainer was Britam, which is 7.96. It closed at 7.96 at a 5.6% week on week rise, followed by Jubilee. That's closed at 360, a 2.9% week on week growth, and Liberty at 8 shillings, 2.6% week on week growth. However, CIC Insurance experienced a bit of a drop at 3.4% week on week to 2 shillings and 56 cents. So looking at the highlights for the week, NSE has gotten approval to roll out the day trading. So it received the regulatory approval to go live on the 22nd of November 2021. So day trading is essentially a form of share dealing in which a trader buys and sells a financial instrument in the same day in an attempt to make a profit. So essentially, day traders are seeking to gain an edge from market inefficiencies in regards to the market's lag in pricing and the prevailing market conditions. So mostly it's just for speculators and arbitragers. So NSE further announced that there's an incentive structure whereby day traders will receive a discount on the second leg of the transaction. So it will be levied at 0.114% compared to 0.12%. The NSE also noted that it has commissioned a new trading system to enable the separation of trading and post-trading activities. So day trading has its own challenges around the world, and it's been associated with the betting-like tendencies in mature markets like the US. However, we are looking forward to seeing increased turnovers and enhanced market liquidity due to this rollout. So key to this program's success, we view that investor education is going to be very important because it requires various strategies, inclusive of trading discipline that is required to hedge from any psychological biases that may arise. So secondly, the CMA, NSE, and KEPFIC signed an MOU to promote infrastructure investments throughout the capital markets. So they signed to support infrastructure project financing and development through the capital markets. We saw that the RBA recently, that's the Retirement Benefits Authority, it recently permitted pension funds to invest up to 10% of their portfolio in this asset class. So infrastructure investments are capital intensive, meaning the pooling of long-term capital is necessary. So this MOU will not only leverage on economies of scale, but will help finance big infrastructure projects. So thirdly, equity to spend 500 billion on Kenya, South Africa businesses. So it had been reported on a daily that Equity has set aside 500 billion to finance Kenyan and South African firms seeking to trade or invest in Africa, where they are moving to expand its business beyond the countries it's operating in at the moment. So it will offer credit to companies wanting to set up manufacturing, construction, health, and investment firms. And it will also facilitate value addition through processing and packaging and finance export or import business. So the lender will be tapping into about 500 billion, of which close to 100 billion will be coming from development institutions such as African Development Bank, and the rest of it is from customers' deposits, which we had seen grew quite impressively from the previous year, about 50%. But mostly this is due to the acquisition of the Congo Bank. The bank is also eyeing South African firms to establish a presence in the market without actually setting up a physical branch. We've seen that there have been a couple of banks that have been diversifying to various countries, either through setting up of banks or through acquisitions as they seek to diversify their revenue streams. Lastly, the Kenya Deposit Insurance Corporation, that's KDIC, moves to introduce bank wills. So it is planning to establish bank wills, which will serve as a stopgap measure to expedite the resolution of collapsed lenders. So apparently they've put on an international tender, which will procure a consultancy to develop a banking solution. So these wills will technically be similar to the wills that are left behind by individuals that describe an action that should be taken in case something happens, on how assets will be disposed of in case of a failure. Essentially, KDC is looking to prevent any failure from happening, but this is just a stopgap in case something happens. We saw that last year they had enhanced their deposit coverage from around 100,000 shillings to 500,000 shillings. So going to the trade idea of the week, it's a buy on Centum. So it has unveiled some strategies to help narrow the gap between its price and the net asset value. So it's been trading at a third of its net asset value. So the strategies it has put in place include deleveraging the balance sheet and paying out all its outstanding debts, smoothing earnings by building an annuity pool and rebalancing its portfolio by regrowing private equity back to around 45%. Moreover, Centum has begun the process of monetizing its real estate portfolio. We also saw in the news today, it's been reported that they have earmarked some companies for acquisition, I think 3 of them in Kenya and 2 in neighboring countries for about 5 billion shillings. And that brings us to the end of our presentation.
Thank you very much, Melody, for that wonderful presentation. There are questions that have been posted here. Kamau is asking, which counters will profit most from day trading at NSE?
Let me then Melody can add her high-level thinking on the same. Well, based on the understanding and the structure of day trading is basically meant for investors to profit from intraday price volatility. So since it's not a long-term view, I don't think counters will profit from this. But among the things we'll see in the bourse is the increase in the bid-ask spread, price depth, and stock volatility. And also since there'll be a greater driver to prices reflecting the news, we'll see the market will become more efficient in terms of pricing in the prevailing market conditions. But on specific counters, I don't think there's a specific counter that will profit from day trading per se. Melody, your views on the same?
Thank you, Wesley. I think just have the same sentiments. Also, maybe you could say like the people who deal with NBV, you've seen that it's been quite volatile, so you might find some people taking advantage of that to make gains. But other than that, I wouldn't say that there's a specific counter that will profit from day trading per se.
Okay, thank you very much. Kamau is still asking, what are your views on the MTN IPO in Uganda?
As I mentioned before, the company is not in our coverage, so we don't have a view at the moment. So unfortunately for that one, we can't give you a buy or sell or such a recommendation. Though there's something to be considered is Uganda's stock exchange market is not as liquid as Kenya's. So maybe if somebody is to get into that market, they might have a bit of difficulty getting out. But it all depends on how this program will go. There are other certain factors, like we mentioned, the prayer week, the regulatory factors, and such. But giving a proper coverage on that, unfortunately, we don't cover that counter.
Okay, Ronald Wani is asking, what is the reason for losses recorded by banking stocks such as NCBA, Cooperative Bank, KCB, and Diamond Trust Bank?
For me, I haven't seen any market moving news to make the prices go down, so I'd attribute it to just price correction as it continues. We're going to wait and see what happens once the results are out. But I haven't seen any market moving news to make the prices go down at the moment. It could be that some institutional, some asset managers are just rebalancing their books to correct their positions.
Okay. Ronald Wani is also asking, any reason for Safaricom gains?
Okay, that's a wide question, but yes, there is an aspect of the foreign participation factor. Also, there are excitements as we come closer to the results release. And talking about that, Safaricom M-Pesa revenues are projected to accelerate on the back of a strong growth in the 30-day active M-Pesa users. This, coupled with the lapse of the zero-rated transactions, is projected to translate into Spartan revenue growth. Also, in line with this, the recently launched M-Pesa Super App is expected to revamp M-Pesa usage on the back of a solid growth in the active 4G devices. In the previous year, it was 39. In the previous results, it was 39.8% on a year-on-year growth, and this is projected to even grow further in this coming year. And the Counters venture into Ethiopia under the consortium-led operating company is a long-term project with opportunities in voice and data, given the teledensity of the country, which is at about 43%. And it goes without saying that the country is projected to heavily profit from the untapped mobile money business on the regulator's green light. So when you look at all this, the company's outlook is enticing for investors who bid for it aggressively. So maybe that may be the reason, some of the reasons behind the gains.
Okay, thank you very much for that answer, Wesley. Ronald Wani is asking again, explain more about the Commercial Bank's Credit Survey report released by CBK. I don't know whether you've had a moment to look at it.
Unfortunately, I haven't had a moment yet to look at it, but once we do, we can get back to you on that, or maybe you can shoot us an email, and we can give you like a succinct answer to that one.
Okay. The other question was about MTN, which you said we are not covering at this moment. So there being no other question, I'd like maybe to ask you if you have if you want to start trading or you want to execute your trades, you can do so via our application called Jikuze, which is available both on Apple Store and Google Play Store. And should you also want to invest in our money market fund, you can also do so via app or via our USSD, that is *671#. So thank you very much, Wesley and Melody, for the presentation today. And also to our participants, we say thank you very much. It is because of you that we organize and do this and bring this webinar to you each and every week. And thank you very much for setting your time to listen to us. I think that's it from my side. Melody, Wesley, I don't know whether you have any parting shot.
None from me. Just thank you for setting aside the time.
Yeah, none from me. Maybe just a side note as we await for the day trading, which is on the horizon. We really need to do some background and put in our homework as investors as we wait for it to come, because many of the day trading strategies and techniques, for example, the range bound trading, which primarily takes into account the support and resistance level to determine the market pressures. These strategies are known to approach the market from a different perspective that's opposed to the tried and tested investment methods, which take into account earnings and companies' outlook and try to squeeze as much information as possible to project growth. So we put our homework as we wait for it.
Thank you very much, Wesley. I think on that point, when day trading will go live, we will need you to have maybe a segment on this webinar to maybe take our participants through the different strategies for day trading, because the market will be live. It will be very exciting to have that. So one last, Sylvia has sneaked a question. Any recommendation for KPLC?
So at the moment, we don't have a recommendation on KPLC. There's been quite a lot going on with that counter. We've seen the task force report that came out, the issues to do with procurement, the expensive PPPs. Though right now they're going through so we're just still analyzing the company at the moment. There's a lot of market news around it, so we need to separate and look at the company fundamentals itself to value the company, to know if it's a buy, sell, or hold.
Okay, thank you very much, and see you all next week. Okay, bye-bye.